Dear viewers, welcome back to my channel. In this video, a problem is solved on preparation of a hire purchase accounts in the books of a hire purchaser. Kindly watch the video till the end, like it, share and subscribe the channel. If you have any comments about the video, please put your comments in the comment box. The question is, Sanmati Company Limited purchased a vehicle on a hire purchase basis on 1/1/2009 from SE Motors Limited and agreed to pay 20% per annum interest on the unpaid balance of the cash price. Sanmati Company Limited paid rupees 20,000 on signing of the contract and the balance in the following yearly equal installments at the end of each year. On 31st/12/2009, rupees 36,000. On 31st/12/2010, rupees 32,000. On 31st/12/2011, rupees 28,000. On 31st/12/2012, rupees 24,000. Prepare vehicle account and SE Motors account limited in the books of Sanmati Company Limited. Now let's move to the whiteboard. In this problem, Sanmati Company Limited is hire purchaser and SE Motors Limited is hire vendor. The agreement is signed on 1/1/2009. The rate of interest is given as 20% and the rate of depreciation is also 20%. The down payment is also 20,000 here, and 4 installments are given here. So as we have not brought the cash price here, first we should ascertain the cash price. So ascertainment of cash price of asset, cash price of the asset. So just let's change the marker here. So here it is date, installment, then interest, which is calculated at the rate of 20% per annum. So here it is CP. So it is depreciation at the rate of 20% on the diminishing balance method. So let's start with the last installment, which is due on 31/12/2012. So it is 24,000. So 24,000. So 24,000 into 20 divided by 120, which comes to rupees 2,000. So it is 22,000 is the cash price. Sorry, 4,000 it is, not 2,000, 4,000 here. So this is 20,000 is the cash price. Then second installment is due on 31st/12/2011. Installment is 28,000. So this 28,000 plus 20,000. So 48,000. So 48,000 into 20 divided by 120, which comes to 12 so 8,000. So 8,000 when it is subtracted from 28 here, so cash price 20,000, right? Then on 31st/12/10, the installment which is given the problem as 32,000. So 32,000 plus this 20. So plus 20,000 plus 20,000. So total will be 72,000. So 72,000 into 20 divided by 120. That comes to here 12,000 here. So just if we calculate here, 0 get cancelled, 12 in the 12 6 6 2 is 12. So 6,000 to 2, so 12,000. So again it is 20,000 only. Then on 31st to 12, 9 here, that is the first installment. So 36,000. So 36,000. So now 36,000 plus 20,000 plus 20,000 plus 20,000. So it will be 96,000. So 96,000 into 20 divided by 120. So 12 ones are 12 eights are, so 16,000 here. So when you subtract the 16,000 from 36,000, you will get 20,000. So the down payment is paid also on 1/1/2009. So the down payment here is 20,000. So 20,000. No interest is payable. So here it is 20,000. So now let us take the total here. 000 here. 6 plus 2 8, 8 plus 8 16, 16 plus 4 20, carry 2, 2 plus 2 4, 4 plus 3 7, 7 plus 3 10, 10 plus 2 12, 12 plus 2 14. So 1,40,000 here. So now let us take the total of this. 8 plus 4, 12 plus 12, 24, 24 plus 16, so 40,000. So now here 1 lakh, 20, 40, 60, 80, 1 lakh here. So 1 lakh here. Now also you can make an observation here. When you subtract this 40,000 from 1,40,000, you will get 1 lakh here. So now let us calculate the depreciation here. So 1 lakh is the cash price here. So we have arrived here rupees 1 lakh as the cash price. So 1 lakh. So first year depreciation 20%. So 20% of rupees 1 lakh. So which comes to rupees 20,000 here. So the difference here is 80,000. So 80,000. Second year again 20% of rupees 80,000, which comes to rupees 16,000. So 16,000. So the difference here is 64,000. So when we calculate for the third year, 20% of 64,000, it is 12,800. So when you subtract here, you get 200, 40 minus 3, 1. So 51,200. So when you calculate for the fourth year, so 20% of 51,200, you are going to arrive 5 1s are 5, 5 0, 5 2s are 10, 2 20, so 5 4s are here. So 60 carry 1, 12 minus 3, 9 carry 1, 0 here. So 40,960 rupees we are going to get the outstanding balance of the asset at the end of the fourth year. So now we need to go for preparing the accounts here. If you prepare this chart correctly, you don't find any difficulty in preparing the accounts here. The core aspect of this chapter lies in preparing the hire purchase chart. That's all. So let us go for preparing the accounts here. So in the books of Sanmati Company Limited, in the books of Sanmati Company Limited, Sanmati Company Limited. So asset we have not given, simply we are given as a vehicle, that's all. So vehicle account. Credit here, it is debit, date, date column here, particulars, then JF, that is journal folio, then rupees, then here is date, then particulars, JF, this is amount column. So the agreement is signed on 1/1/2009. When the down payment is receivable, vehicle account debit to SC Motors, who are the vendors here. So SC Motors. So the down payment here it is rupees 20,000. Then on 31st/12/2009, when the first installment it becomes due for payment, then the entry will be vehicle account debit, interest account debit to SC Motors. So we should take only the principal sum. So in the last we have seen 16,000 is the interest, so 20,000 is the principal. So now let us take the total here, 40,000. So on 31st/12/2009, when the depreciation is allowed, depreciation account debit to vehicle account, so vehicle account is credited by depreciation. So the first year depreciation we have calculated in the hire purchase chart as rupees 20,000. So 20,000. So on the same day let's balance here. So by balance carry down here. So here it is 40,000. So the difference remaining here is 40,000 only. Sorry, 20,000. So on 1/1/2010, two balance brought down. So it is 20,000. Second installment it is due on 31st/12/2010. Then the entry will be vehicle account debit, interest account debit to SC Motors. So to SC Motors here. So in the second year the interest charge is 12,000, so it is now 20,000 is the principal. So again it comes to 40,000 here. So on 31st/12/2010, when the depreciation is allowed, then the entry will be depreciation account debit to vehicle account. So vehicle account is credited by depreciation. So second year it is 16,000 is the depreciation. So let's do the balancing here. So by balance carry down. So it is a 40,000. So 40,000. So when you take the difference here, it will be 24,000. So this is brought down on 1/1/2011. So two balance brought down. So it is 24,000. When the third installment it is due on 31st/12/2011, then the entry will be vehicle account debit, interest account debit to AC Motors. So to AC Motors here, to AC Motors 8,000. Sorry, 8,000 is the interest, 20,000 will be the principal amount here. So 44,000. So on 31st/12/11, then when the depreciation is allowed, depreciation account debit to vehicle account. So vehicle account is credited by depreciation. By depreciation, it is now 20%, 12,800, which we have calculated in the higher purchase charge. On the same day we will do balancing here. So by balance carry down. So let's do the balancing here. So 44,000. So let's find the difference here. 200 carry 1, 2 plus 1, 3, 3 plus 1, 4. So 31,200. So which is brought down on 1/1/2012. So two balance brought down. So 31,200. When the last installment it is due on 31st/12/2012, then the entry will be vehicle account debit 20,000, interest account debit 4,000 to SC Motors. So to SC Motors, again 20,000 here. So 51,200 is the total here. So on 31st/12/2012, when the depreciation is allowed, then the entry will be depreciation account debit to vehicle account. So vehicle account is credited by depreciation. So it will be 10,240. So on the same day, let's balance here. So by balance carry down. So let me write the total here. So 51,200. So when you find the difference here, 60 carry 1, 2 plus 1, 3, 3 plus 9, 12 carry 1, 0. So 40,960. This is how we should prepare the vehicle account. So the next account we need to prepare is that SC Motors account. So here SC Motors account, let us go for preparing SC Motors account here. So of course this is a personal account here. So SC Motors account. So when the down payment is due on 1/1/2009, then the entry will be vehicle account debit to SC Motors. So SC Motors is credited by vehicle account. That is the down payment here, it is 20,000. On the same day, that is on 1/1/2009, it is paid. So SC Motors account debit to bank account. To bank account 20,000. The first installment is due on 31/12/2009. Then the entry will be vehicle account debit, interest account debit to SC Motors. So SC Motors is credited by vehicle account 20,000, by interest 16,000. So when it is paid on 31/12/2009, then the entry will be SC Motors account debit to bank account. So the first installment is paid as 36,000. So when you take the sum of this year, 56,000. So here also 56,000. So on 31/12/2010, when the second installment is due, then the entry will be vehicle account debit, interest account debit to SC Motors. So SC Motors is credited by vehicle account rupees 20,000. Then on the same day, by interest. So by interest it is rupees 12,000. So 32,000. So here the second installment is paid on 31/12/2010. SC Motors account debit to bank account. So to bank account. So to bank account 32,000. So here 32,000. The third installment, it is due on 31/12/2011. Then the entry will be vehicle account debit, interest account debit to SC Motors. So SC Motors is credited by vehicle 20,000. Then interest by interest 8,000. So 28,000. So on 31/12/2011, when the third installment is paid, then the entry will be SC Motors account debit to bank account. So to bank account, that is 28,000. So here it is 28,000. When the final installment it is due on 31/12/2012, then the entry will be vehicle account debit, interest account debit to SC Motors. So SC Motors is credited by vehicle account 20,000. Then on the same day, by interest 4,000. So it is 24,000. So on 31/12/2012, when the final installment is paid, so SC Motors account debit to bank account 24,000. So this is how vehicle account and vendors accounts are prepared in the books of a hire purchaser. Thank you.